So good evening, guys. Well, now we are on market structure, and in today's video we'll be teaching how to correctly identify and how to correctly mark out market structure. Now this is this is an area, an aspect in the market whereby a lot of traders do have problems identifying structures. Now the thing I want you all to put in mind is market structure, the phenomenal thing, the key and the iconic thing I want you all to put in mind is market structure depends and varies on the type of trader you are. That's one thing I want you all to put in mind. The market structure depends and varies on the type of trader you are. Now we have different types of traders. We have the swing traders, we have the intraday, we have the scalpers. Those are the major traders you actually find in the market. Let's not go long-term wise. So, like I said, market structure will actually sorry, but I didn't get water. Yeah. So market structure, you get it in the type of trader you are. In the sense that all of this fun stuff is going to make sense because I'm going to be diving a little bit deep in understanding of structure and how to mark out structure correctly. Now, why I say market structure varies in different types of trader is the fact that I can't be a swing trader and the structure that is printed to me swing wise will be the same way a scalper will view structure. A scalper mostly trades the lower time frame, such as the 15-minute, the 5-minute, the 1 minute, and that is all they have. Now, the structure on this time frame is not a powerful structure. However, to a scalper, a 15-minute time frame is just a weekly time frame. To an intraday trader, to a swing trader, for a scalper, listen to me very well. For a scalper, a 15-minute strong time frame is all noise to an intraday trader, and that brings us to the concept of identifying proper market structure. So the thing I want you to do in this video, pause this video for a while. Okay, we'll come back to it. Just pause it and ask yourself, what type of trader are you? Are you a swing trader? Are you a day trader? Or are you a scalper? Personally, I'm a scalper, so this is how I tend to view structure. Now, there's something called the basic market structure, that is the expected market structure. This is what everybody wants to see. Price printing series of, it is also represented by this model here for a bullish scenario. Price printing series of what? Higher highs, higher lows, denoted by these swing points. Higher highs, higher lows, higher highs. Obviously, this is an higher low set in motion. So same thing to a bearish scenario is denoted by a lower high, lower low, lower high, lower low, lower high, and also a lower low. This is the basic market structure. This is how people tend to view structure. This is the simple stuff you will see everywhere once you pop out to your YouTube, your TikTok to just learn on structure. These are the things you will mostly see. Now, I'm sorry, and I hate to bust the juice that market don't actually move in this direction. However, this is the backbone of how market do move, or of how price do move in this market. This is the back. Now, boiling down to how we do interpret structure, we can see this is an advanced model. Now, an advanced model is the way, and this is the expected way we expect market to move in a certain direction. Now, this is how we tend to view this advanced market structure is the expected market structure. This is how we expect to see price deliver in the market and not the basic structure. Now, advanced market structure can never be explained unless liquidity is put in motion. That is, you need to understand the concept of liquidity before you can understand advanced market structure and understand how price actually delivers. Now, if we look at this bullish scenario, I'll be taking my time to explain very well, so you guys look key into this bullish scenario. Now, based on the backbone of market structure, which we first learned, I hope we know that we can see price actually did deliver in this sort of manner. That is, in the basic form. You can see very well. Price actually does deliver in the basic form, which is this. So you can see even the basic form or the basic stuff works. Now, this is where it all boils down to the type of trader you are. Now, coming into this market, if I was a scalper, all those intraday breaks means something to me. But to a swing trader, he is focused just on places around here. A swing trader is focused on somewhere here, places like this place. These are only the places they are focused on. And basically, I can say a swing trader just basically they trade the basic structure. However, most times we don't meet swing traders. I'm not a swing trader personally. So you need to understand what market is doing. Now, on behalf of scalpers and intraday traders, these little breaks, these tiny breaks, these little breaks denoted by the red range. Sorry about this, guys. Yeah, denoted by the red range means a lot. These are key points in the market. That is, we know that even in an expansion such as this, even in an expansion such as this to this, then to this, we know price tend not to move directly in this form due to the fact that market is fractal. So on the much lower time frame, we see some trends put in place like this, and this is structured delivery to you. This is how structure delivers intraday trader wise and not swing wise. This is how structure deliver wise. So you need to put all these internal breaks, this fractal structure, it's called internal structure or substructure. You need to put them into notion before you can actually understand what market is doing as far as you are an intraday and a scalper, an intraday trader or a scalper. Now, these internal breaks necessarily don't mean a lot to me. It only means, okay, I understand the fact that price is originally bullish. So all these intermediary breaks are just liquidity grabs because market needs what? Liquidity before it can actually print out a structure. It is compulsory. Market needs to seek liquidity in form of internal breaks before market seeks out what the actual structure is, or sorry, before the actual structure is printed. Okay, so follow me, guys. So these intraday structures are where a lot of traders they get fucked up. These are where a lot of traders get, oh, imagine, so a lot of traders are like, so we are bullish, oh wow, we had this break, and they are ready to trade off of just this intermediary break, and see, they lost money. They're like, okay, we're bullish again, we had this breakdown, ready to trade somewhere around, yeah, they're ready to trade this, and they're fucked up again. Now this is it. If you don't understand what market is doing, if you don't understand intraday structure, if you don't understand liquidity, I'm sorry, you won't be able to trade markets, because markets will keep on taking you as liquidity before it builds up a structure. Now, there is a simple way I love to identify a trend. Now, a trend can be identified in various ways, like I said, using of this basic structure. Now, this basic structure, I want you all to understand that a strong low and a strong high is always put in place in an advancing market. In a bullish wise market, market tends to print immediately. Market prints a new higher high, the low that printed that higher high becomes a very strong low. That is, we don't expect markets to come and break off of this, and that is what will guide us into understanding how we are bullish and how we continue to be bullish. Okay, now this is a scenario of markets. This is the only way you can understand markets. Now immediately price printed this low was protected low in such a way that we don't expect to see markets break below this low if we still want to remain bullish. And that is how I view structure. That's a simple way. So you can be guided, because even as price came, I hope you know, before this break of structure was printed, this was the protected low. Yes, this was it. This was the protected low. Now let's see, as price moves down, broke internally. Price broke at this minor break of structure internally. Now, because it had this minus break of structure internally, doesn't mean we are now bearish. It's only price facilitating, it's just only price seeking liquidity to deliver to higher prices. And can you see, when price soak out its liquidity, it delivered into markets, it delivered directly to the next structure. The same thing in all these things keep happening, and they keep repeating themselves on and on. Now, this is the fact that to understand structure and how I view structure major liquidity must not be taken out, or the protected low in the bullish market must not be taken out. So I am only bullish on this market if price does not come and take out this low, this particular low. I am still bullish on this market. I'm very much bullish on that market. If price does not come and take out this low, that is, even if price does something like this, does a lot of this at this point of the market, I am not bearish. Even if price does all of this, I don't care. I don't care. If price does all of this, because these are things price can do, then come here and print. These are the things we tend to see price do. Yeah, these are the things we tend to see price do. Price does things like this. And why am I still bullish? Because my protected low, based off on higher time frame most times, is still protected. So I am bullish. However, all these little internal breaks, they mean nothing to me. Nothing. All these internal breaks, they mean nothing to me. Although to a scalper, this internal break means a lot. This internal break means a lot. So all of this is nothing to me. This is everything here is noise. All of this structure is noise. I won't advise any of my students to trade noise. So this is understanding how market is printed. Same thing for the bearish scenario. We have a bearish advanced market, that is price printing series of what? Lower highs, lower low, lower highs, lower low, lower highs, and lower low. And can you see all of this red range are denoted internal structure? That is all our major liquidity is highlighted out. This is highlighted, this is highlighted, and you can see how our major liquidity was not, and it was never ever taken. That is to show you that I still remain what? Bearish on this market, unless I see a break above a protected high. This is when I can say, okay, yes, I'm starting to print more and more of this. But as far as I have my protected highs and protected lows of swing structure based off of higher time frame protected, I am still ready to continue that trend. Now let's go through the market walkthrough. I'll go to a random market. Let's just pick a random market somewhere, and let's see how we can identify structure. So I'm going to be giving one example for the sake of this video. I don't want to bombard all of you with bulky videos or bunky. I don't want all of you to wait up till anytime. So let's just pick a random pair, CHF something, I don't know, card JPY or anything, CFJPY something. Let's pick a random pair, and now based off of this time frame, like I will say, based off of this time frame, what are we? We are obviously bullish. Basic market structure, print it out. This your part is your greatest tool. These things is your greatest tool, and this is how we keep on printing bullish. Can you see? So this structure to me is bullish, in the sense that we had the most recent break here, and see how easy this thing is. We had the most recent break here, and where's our protected low? This. So I am ready on behalf of an intraday trader. I am very much bullish on this market unless this particular low is taken out. And this is the same way we can identify structure. Now the same way we are bullish on this structure is the same way me as a scalper on my 15 minutes. What am I? Okay, got so good. I am still bullish on 15 minutes. I am still bullish on 15 minutes. Can you see? I'm still very much bullish on those 15 minutes. Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Thank you. We have higher high, we have higher low, we have higher high. Now can you see this? Can you see this break? This is a break. Now why do we not consider it to be bearish move? Because we understand that liquidity must be taken into the market before the major push. So this little break, or this tiny break right here, is not a major break. This is just noise. Just because of this break does not mean I am bearish. Because of this break doesn't mean I am bearish. So that is a very strong way to identify trend. A very strong way to identify trend. A very strong way to identify trend. Now let's pick out another time frame randomly, and let's see. 4 hours. I always advise you use your 4 hours to analyze. Your 4 hours and your daily is your biggest structure. Your 4 hours and your daily is your biggest structure. Now let's assume an intraday trader came into the markets at this time of the day when market was printing this. Now, what will it say? If you were to ask an intraday trader and you were to ask a swing trader, I hope you know the answers will be different. Because I, as an intraday trader, I am bearish on this market. I, as an intraday trader, I am bearish on this market. But I, as a swing trader, this is what a swing trader is seeing. A swing trader is seeing this. A swing trader will tell you market is bullish. An intraday trader will tell you market is bearish. Now you can see how structure and how identification of structure tends to it boils down to the type of trader you are. So before I go, and I'm sure you guys should understand how to identify proper structure very well from this video. So before I go, the thing I want you to put in mind is, before you go into the markets, identify the type of trader you are. Are you a swing trader? Are you an intraday trader? Or are you a scalper? So if you can put that in Notion, then you obviously know what to do. You don't need anyone to boss you around. You don't need anyone to tell you their opinion on the markets, because what they are seeing might be different from what I'm seeing. I suffered this loss when I started, because when I started trading, I was like, oh, some people will be like, market is bullish, market is bullish. But I, on my part, I am bearish. I am seeing a bearish move. But I came to understand, all this came to make sense when I begin to understand that I am more of a scalper. What I'm seeing is definitely different from what an intraday trader is saying. Okay, so you guys should put all the stuff, put in all the practice, identify structure well. Okay, and put in all the practice. I'm sure you guys will do well. So before I go, I want to say a big shout out to Spark Signal Academy. You guys should continue to like and follow for more videos and more premium content. Thank you so much. I really do appreciate you. Subscribe for more, as this is our video. This is proudly sponsored by Spark Signal Academy. So thank you guys. So I'll be leaving this structure for those who need it. Study this structure well. This is the model of structure. This is how I view structure. Okay, so you guys should study the model well. Thank you and good night.